we are now looking at section 25B3. So remember, section 25B 1 plus 2, these are the sections that tells us who gets taxed in a trust. So that's where they tell you, if you are the beneficiary, you'll be taxed on it. If you have a vested right to something, you'll be taxed on it. If no one has a vested right, the trust will be taxed on it. Remember, section 25B is weaker than section 7. In other words, section 7, which applies when there are donations, will always override section 25B. Right, but now we look at section 25B3. So what section 25B3 says, very simple, it says, if you are getting taxed on the income, then you must also get all the deductions of the exemptions. So guys, basically, this should make a lot of sense to you. So basically say the expenses and the exemptions follow the income. So here's the trust, right? Remember, section 25B is the section that applies specifically to trusts. There was no donor. The trust has income of 100,000 rands, and let's say it has expenses of 20,000 rands. The trust deed says A, which is a beneficiary, trust deed says A has a vested right to the income, right, and that specific income in this case. So when you do A's taxable income, the first thing is that income will be included in terms of section 25B1. You'll include the 100,000 rands, and the expenses, you'll qualify for that as a deduction in terms of section 25B3, if you could qualify for the expenses. So it's still all the normal rules applies. Section 25B just tells you who gets it. So all the normal rules, just who gets it. Right, so that's what section 25B tries to tell us. But now, very important here, please note that the beneficiary may not create an assessed loss in respect of the income received. So what does that mean? It means, let's say, so this income, this expenses we had here for 20,000 rands, I'm going to change that. Let's say that was 120,000 rands. Now remember what this means for us. It means income, 100,000, expenses, 120,000. So usually what this means for us is we have a 20,000 rands assessed loss that is usually carried forward and then used in terms of section 20 in the next year. Now, what I want you to see is that section 25B 4, 5, and 6 tell us how to handle this. So here's an example. So the deductions from the trust may not exceed the income from the trust. So Mr. X received income of 100,000 from the trust. The deductions to the trust relating to the trust are 120,000 rands. So that 20,000 rands may not be used by Mr. X. That's what section 25B4 tells us. So understand what they're trying to say here. So if this is now Mr. A, right, Mr. X, whatever the beneficiary is in this case, he can't make this 120,000 rands here and can't create a loss. They tell us you can't do that. So already what they're trying to tell us is that although you have expenses of 120,000 rands, you will have to limit it to 100,000 rands. Okay, now see what they then say. Then they say the excess amount, so that 20,000 rands, may be used as a deduction by the trust against the trust's taxable income. So if there are any other taxable income in the trust, they can then use that. So, for example, in example 2, it says, assume that the trust had taxable income of 5,000 rand. So this, what I mean by that, is this trust, assume that it had other income of 5,000 rand. So this is the trust, its own little tax calculation. So it has taxable income of 5,000 rand. So this is the amount that the trust should be taxed on. They say that excess amount, remember, 100,000 income, 120,000 expenses, that 20,000 rands, you can take that expenses, that 20,000 rands, and you can reduce that 5,000 rands to nil. So you had 20,000 rands which you couldn't use, and you've used up 5,000 rands of that. So can you see? It goes from the trust to the beneficiary, back to the trust again. And then, any amount which remains, that 15,000 rands, will be carried forward to the next tax year and may then be used by the beneficiary. So, it goes that 15,000 rands, in the next tax year, A can then use it again. So in the next tax year, they will be able to claim a deduction of 15,000 rands. So can you see the path it goes? It goes, the trust receives the income, but the beneficiary gets taxed on it. So it goes to the beneficiary. Then it goes back to the trust again, then it goes back to the beneficiary again. And that is section 25B then in its entirety, which is relevant for your syllabus.